Welcome to our deep dive today into the Indian footwear market.
Oh, very exciting.
Yeah, we're going to be looking at Metro Brands, and we've got their latest earnings call transcript.
So this will be good.
Yeah, it should be pretty fascinating to kind of get, a peek behind the curtain and see what they're talking about, how they see things going.
Yeah, earnings goals are always a good source for that kind of information.
Exactly.
It's like getting a direct line to what the company's thinking.
Exactly. And we have excerpts here from their Q3 fiscal year 2025 call. And it's a pretty good group of folks chiming in. We got the chairman, managing director, CEO, CFO, and even the president of the sports division.
Sounds like a full house.
Yeah, a lot of voices in the mix, so we can jump right in.
Yeah, let's get into it.
The CEO, Nissan Joseph, kicks things off, talking about a return to double-digit revenue growth, a solid 10%. But then he makes this interesting comment about competitors launching early end-of-season sales and how that may have impacted December.
Interesting. You got to wonder if there's a little shade being thrown there.
Yeah, a little side-eye.
Almost like they're saying, we're above that. We're Metro Brands.
Yeah.
We're not panicking.
Right. We believe in our products.
Exactly.
It ties into what we see as their focus on, more premium offerings. And he even mentions that over half their sales are from products priced above 3,000 rupees.
Well, that's a pretty bold statement.
Yeah. I mean, especially in a market that can be as price sensitive as India.
Makes you wonder if they can actually hold that line.
Yeah.
If everyone else is slashing prices, are people really going to stay loyal to Metro? Or are they going to be tempted by those, bargain bin prices?
Yeah. Are those deep discounts going to win out in the end?
That's the big question.
Yeah, and that's something we should keep an eye on as we dig into, individual brand performance.
Speaking of brands, we got to talk about the elephant in the room.
Yeah.
Fila.
What's going on there?
They mentioned liquidating some inventory, which kind of messed with their gross margins a bit.
Yeah, they said 50 basis point hit, which is not nothing.
Definitely not.
It sounds like they're trying to clear the decks to, relaunch Fila.
Yeah, like a fresh start.
And they're going to focus more on, smaller, trendier capsule collections.
So they're trying to find like a niche.
Yeah.
Reposition the brand, maybe make it a bit more exclusive.
Yeah, I mean, it seems like Fila is a brand that's been trying to, figure out its footing.
Trying to stay relevant.
Right, in a very crowded market.
For sure.
And then we have Walkway, their value-oriented brand.
Oh, yeah. The one targeting that economy segment.
Right, and they describe it as showing green shoots.
Green shoots.
Yeah.
So some positive signs.
Yeah, some signs of life, but they also say the growth is slower than they expected.
So maybe not a full-blown bloom just yet?
Yeah, and it seems to indicate that they're still, experimenting, trying to figure out the right approach for that segment of the market.
Yeah, they're still fine-tuning their strategy for Walkway.
Exactly. So, it's interesting because it's like they're playing this high-stakes game of chess.
That's a good analogy.
They're trying to, capture different parts of the market with these different brands.
Different pieces on the board.
Right. And, it's a really fascinating strategy, but it's not without risk.
No, for sure. It's a risky play.
Yeah. I mean, managing all those brands, while still maintaining a clear identity for each one.
Right. Keeping them distinct.
It's a challenge.
It's a real challenge.
And then, you layer on top of that the whole discussion of store expansion, which was a big topic that kept popping up.
Oh, yeah, for sure.
So they'd initially planned 100 new stores in fiscal year 2025.
That's ambitious.
It is, but they scaled back that plan down to 22.
Whoa. A pretty significant reduction.
Yeah, they blamed it on mall opening delays.
You need malls to open to put stores in them.
Right. And also, just the fierce competition for good retail space.
Oh, yeah. Prime real estate is hard to come by.
But here's the kicker.
Okay. I'm listening.
They're still sticking to their goal of 225 new stores.
Wow. So they're not backing down.
No, by the end of fiscal year 2026.
Still very aggressive.
It's a really bold move.
You got to admire their confidence, though.
Right. Especially when you consider, how much retail is shifting online.
Yeah. I mean, e-commerce is exploding.
Exactly. And they're doubling down on brick and mortar.
When so many are going digital.
Yeah, it makes you wonder, what's their end game here?
Like, what's the big picture?
Are they, betting on the in-store experience, the ability to touch and try before you buy?
That tactile experience?
Or are they underestimating, the allure, the convenience of online shopping in India?
Yeah.
It's a big gamble.
It is a big gamble.
Yeah. So I think that's something to really keep in mind.
For sure.
And, all of this brings us to another big challenge. They mentioned BIS regulations.
Oh, right. BIS. What does that even stand for?
Bureau of Indian Standards.
Bureau of Indian Standards.
Yeah, so could you maybe unpack what that means for them and for the industry as a whole?
Well, BIS is basically India's, quality control watchdog.
Okay,
They've implemented some stricter standards for imported footwear.
gotcha. So stricter quality controls.
Exactly. And it's created a bit of a bottleneck in the import process.
Oh, I see.
Companies are scrambling to get their factories, certified to meet these new standards.
Makes sense.
And it's hitting Metro Brands particularly hard because of their Foot Locker franchise.
Right.
They rely heavily on imported goods, mostly from Southeast Asia, where a lot of footwear manufacturing happens.
Right.
So it's kind of thrown a wrench in their plans.
Yeah, the CEO sounded a little frustrated,
Yeah.
like it's this unexpected hurdle they have to overcome.
It's like they're trying to run a race and suddenly there's this new obstacle in their path.
Exactly. And, they're being really cautious about expanding Foot Locker now. They've only signed 3 stores so far.
That's very cautious.
Yeah.
It seems like they're kind of in a holding pattern,
Right.
waiting to see how things shake out with these regulations before they fully commit.
Right. And it'll be interesting to see how they adapt, whether they consider shifting some production to India.
Oh, like bringing manufacturing closer to home.
Right. Like some brands have already done that.
Yeah.
Crocs was mentioned.
Oh, interesting. So they're setting a precedent.
Yeah. And it's a high stakes game of wait and see,
Absolutely.
So they're facing all this pressure, fierce competition, evolving consumer preferences, and now these regulatory hurdles.
That's a tough landscape.
It is. And it really begs the question, how do they plan to balance growth with profitability
Yeah. How do you manage all of that
in this complex environment?
in this very dynamic and evolving market?
And that's where their philosophy really comes in.
Okay, I'm all ears.
Because they're not chasing sales per square foot at all costs.
Oh, that's interesting.
Yeah. They're prioritizing profitability.
The old focus on the bottom line.
Right. Even if it means having smaller stores,
Mhm.
in those tier 2 or tier 3 cities.
So a more measured approach.
It's a more mature approach, and it's focused on, sustainable growth.
Not just chasing those flashy numbers.
Exactly.
The tortoise and the hare.
Yeah.
Slow and steady wins the race.
Right. But the question is, can that approach satisfy investors?
Yeah. Will Wall Street be happy with slow and steady?
Investors who are looking for those sky-high growth numbers.
Those big, flashy returns.
Right.
That's a good question.
It may not satisfy all of them,
Probably not.
but you know what it does? It protects them.
Oh, okay.
If there's a downturn.
If the market takes a dip.
Exactly. If consumer spending tightens, Metro Brands is in a better position,
They're more insulated.
right, to weather the storm.
That's a good point.
And their multi-brand strategy, that adds another layer of resilience.
It's like diversification.
Exactly.
Yeah.
Because they're not reliant on a single brand's performance.
Spreading the risk.
Right. It's like having a diversified investment portfolio.
I like that analogy.
So it's about playing the long game,
Thinking long term.
building a sustainable business.
Not a flash in the pan.
Exactly. Not just trying to pump up the stock price.
Right. Building something with staying power.
And that might be, their biggest differentiator.
Their secret sauce.
Yeah, in this dynamic and competitive market.
It's a good strategy.
So it's all about taking that long-term view
Playing the long game.
and building something that can last.
Building for the future.
And that's something I think we can all learn from.
For sure.
And it'll be interesting to see how this all plays out
Definitely.
in the coming years.
The Indian footwear market is a fascinating space to watch.
It really is.
So many moving parts.
Exactly.
And Metro Brands is right there in the thick of it.
Right at the forefront.
Leading the charge.
Yeah, trying to make their mark.
For sure.
So, yeah, it's going to be fun to see what happens next.
I'm excited to keep following their journey.
Me too. So stay tuned for more.
Sounds good.
And we'll be back after the break to dig deeper into
The nitty-gritty
Exactly.
of Metro Brands strategy.
Exactly. It strikes me that they're walking a tightrope here.
In what way?
Well, they have this ambitious growth strategy, right?
Yeah, with all those new stores they're planning.
Exactly.
Mhm.
But they're also laser focused on profitability.
So how do they reconcile those two things?
Right. Because sometimes those goals can seem at odds with each other.
Absolutely. It's a delicate balancing act.
And then you add in the whole BIS regulation situation.
Right. Which brings us back to Foot Locker.
Exactly. And it seems like they're hesitant to really go all in on that brand.
Understandably so.
Mhm.
I mean, until the supply chain situation becomes clearer, right? Why rush into expansion when you're facing potential disruptions?
Yeah, it's a good point. It really highlights how important, adaptable supply chains are in today's world.
Absolutely. I mean, things can change so quickly.
Exactly. And it seems like they're in a holding pattern for now.
Yeah, waiting for the dust to settle before they make their next move.
It's interesting, though, that they're even considering shifting production to India.
Yeah, that's a pretty big decision.
It is. I mean, what are the implications of that?
Well, for Metro Brands, it would be a massive undertaking.
Right.
I mean, we're talking about substantial investments, infrastructure development,
Right.
potentially even, navigating a whole new set of regulations.
Yeah. And labor practices.
Exactly. But it could offer long-term benefits.
Like what?
Well, for starters, reducing their reliance on imports.
Okay. So more control over their supply chain.
Exactly. And potentially even lowering costs.
Okay. So there are pros and cons to weigh.
Definitely. It's a strategic decision with far-reaching consequences.
For sure. Okay. Let's shift gears a bit
Sounds good.
and talk more about their multi-brand approach.
Yeah, they've got a lot going on there.
They do brands spanning the entire price spectrum.
From premium to value.
Right. So is that a recipe for success?
Well, could be.
Or could it be a recipe for confusion?
That's the risk they run, right?
Yeah. I mean, how do they make sure each brand has its own distinct identity?
Exactly.
Yeah.
A clear value proposition for the consumer.
Otherwise, they risk diluting their overall brand equity.
Right. It's like having too many voices in a choir.
Yeah, if they're not in harmony, it just sounds like noise.
Exactly. And that's where their focus on data becomes so important.
Oh, yeah, they mentioned this.
They said they're going to provide more detailed information on footwear ASPs in future calls.
ASPs.
Average selling prices.
Oh, right. Okay. And why is that so important?
Well, it gives a much clearer picture of their pricing power.
Okay, I see.
Are they able to increase prices without sacrificing volume?
Interesting.
That's a key indicator of brand strength.
Okay, so it's about more than just selling more shoes.
Exactly. It's about selling them at the right price.
And understanding the value proposition of each brand.
Right, making sure that resonates with consumers.
Speaking of which, what are your thoughts on Walkway?
Walkway, oh yeah, they're value-oriented brand.
The one targeting the economy segment.
Right.
Is that a smart move in a market that's becoming increasingly, premium obsessed?
It's a good question. But I actually think it's a shrewd strategy.
How so?
Well, India has a vast and diverse population.
With varying income levels.
Exactly. And catering to the value-conscious consumer.
Allows them to tap into a whole new market.
Exactly. It's a huge opportunity.
But isn't it risky?
In what way?
I mean, they're known for their premium offerings.
Right.
Could this dilute their brand image?
That's a valid concern.
Right.
But it seems they're approaching it cautiously.
Okay, how so?
They're testing and iterating, learning from their experiences.
So like a controlled experiment.
Exactly. Gathering data, understanding consumer behavior in that segment before making any big commitments.
So they're dipping their toes in the water.
Exactly. Before jumping in headfirst.
Smart. Okay, let's circle back to their long-term growth outlook.
Yeah, those were some ambitious targets.
They were. They're aiming for a HJR of 15 to 18% over the next 2 to 5 years.
That's a pretty aggressive goal.
It is, especially considering all the challenges we've discussed.
Right.
So is that even achievable?
Well, it's definitely a stretch goal.
Yeah.
But it's not entirely outlandish.
Okay, so there's a chance.
There's a chance. They're banking on a few key factors.
Oh, like,
Well, first, the Indian economy is projected to continue its growth trajectory.
so a rising tide lifts all boats.
Exactly. And that growth will drive consumer spending.
So they're riding that wave.
Precisely. And second, their aggressive store expansion plan if executed successfully.
Key phrase, if executed successfully.
Right. But if they can pull it off, it'll give them a wider reach and access to new markets.
So more stores, more customers.
Exactly. But there's a big if there.
Yeah, I mean, the retail landscape is incredibly competitive.
Oh, absolutely.
Yeah.
Everyone wants a piece of the Indian consumer pie.
So how do they stand out?
That's where their multi-brand strategy comes in.
Okay, and their focus on profitability.
Right. They're not just another shoe retailer.
Right.
They're offering a diverse range of brands.
And a value proposition that goes beyond just price.
Exactly. It's about the experience.
It's about building a sustainable business.
Not just chasing short-term gains.
Exactly. And that long-term perspective.
Could be their secret weapon.
Yeah, in a market that's often so focused on the next quarter's result.
Absolutely. This deep dive has been really insightful.
It has. I feel like we've gotten a good glimpse into the inner workings of this company.
Yeah, a peek behind the curtain.
Exactly. And it's clear that they're operating in a very complex and ever-changing market.
Absolutely. The Indian footwear market is no walk in the park.
No pun intended.
Right. But Metro Brands seems up for the challenge.
They do. They seem to have a deep understanding of the Indian consumer
And a willingness to adapt.
and a willingness to, take risks.
Calculated risks.
Right. And that's what makes them so interesting to watch.
Absolutely. They're definitely a company to keep an eye on.
It's clear that Metro Brands is in it for the long haul. They're thinking about sustainability, building a brand that truly resonates with consumers. But there's one piece of the puzzle we haven't really touched on yet. E-commerce.
Ah, yes.
Yeah.
The digital elephant in the room. It is interesting that they're going all in on brick and mortar when so much retail is shifting online.
It does seem counterintuitive, doesn't it?
Uh-huh.
Especially when you consider how quickly e-commerce is growing in India.
It does make you wonder if they're missing a trick. However, they did mention that their e-commerce business is performing well.
Oh, okay.
And they've even dabbled in quick commerce.
That's interesting. So they're not ignoring the digital space entirely.
It seems not.
Do you think they see online and offline as completely separate channels? Or are they trying to create a more integrated experience?
That's the million-dollar question, isn't it? Are they striving for that omni-channel dream?
Right. Where the online and offline worlds seamlessly blend together.
Exactly.
Imagine, browsing for shoes online, finding a pair you like, and then heading to a nearby Metro Brands store to try them on.
Make the purchase.
Exactly, or
Yeah.
vice versa. You see something in the store, but they don't have your size.
So you order it online right then and there.
Exactly.
That's the holy grail of retail, isn't it?
It is meeting the customer wherever they are.
Providing a consistent experience.
Across all touch points.
Exactly.
It's about, removing friction from that customer journey.
Making it as easy and enjoyable as possible.
Exactly. To shop with your brand.
It'll be fascinating to see how Metro Brands approaches this challenge.
Yeah. Will they invest heavily in technology to create a more integrated experience?
Right. Will they leverage their store network as fulfillment centers for online orders?
These are the questions that will really determine their success in the long run.
Absolutely. They can't ignore the digital shift.
But they also need to leverage their strengths in brick and mortar.
It's a balancing act.
A delicate one.
This deep dive has given me a whole new perspective on Metro Brands.
Me too. And the Indian footwear market as a whole.
Absolutely. What are some key takeaways you'd highlight for someone who's new to this space?
That's a good question. Well, first and foremost, the Indian footwear market is dynamic.
It is.
And it's growing rapidly.
At an incredible pace.
But it's also intensely competitive.
Oh, absolutely.
And Metro Brands is a major player.
They are.
And their strategy is definitely worth paying attention to.
It is.
They're not afraid to make bold moves.
No, they're not.
Whether it's expanding aggressively,
Right.
focusing on profitability, or embracing that multi-brand approach.
They seem to have a deep understanding of the Indian consumer.
They do.
And a willingness to adapt to those changing market dynamics.
Absolutely. It's like they're not just reacting to trends.
They're trying to shape them.
Exactly.
Yes.
And their commitment to brick and mortar expansion is a testament to that.
Yeah, they're betting on the enduring appeal of that in-store experience.
Even in an increasingly digital world.
It's a fascinating gamble.
It really is. And one that I'll be watching closely.
Me too.
Yeah?
What are you personally left wondering about?
That's a good question. I'm really curious to see how they navigate the tension between their premium positioning
Right.
and their foray into the value segment with Walkway.
Yes.
Yeah.
Can they successfully cater to both ends of the market?
If diluting their brand identity.
That's the big question.
It is. And it speaks to the broader challenges of brand management.
In a world where consumers have more choices than ever before.
So true. Another thing I'm pondering is how they'll balance those growth ambitions with their commitment to profitability.
Can they sustain those high growth rates without sacrificing margins?
It's a tightrope walk.
For sure. One that requires careful planning execution.
And maybe a little bit of luck.
Always helps.
This deep dive has been a real journey of discovery.
It has. We've uncovered so many layers of complexity
Within Metro Brands,
and the Indian footwear market as a whole.
it's a reminder that there's always more beneath the surface.
Absolutely.
Yeah,
And that's what makes exploring these topics so rewarding.
exactly. So to our listeners out there, keep digging, keep questioning.
And keep your eyes on Metro Brands.
Their story is far from over.
And it's bound to be an exciting one.
Until next time, keep exploring.